The numbers don't lie. As a real estate investor, you need to know your statistics. And today we're going to talk about the stats for the central Pennsylvania multifamily market. Knowing what the numbers are and how they're trending can be very key for you as an investor in order to make an informed decision. I've heard a lot of investors recently say that they're feeling uncertain because of government instability and where the interest rate's going and all that fun stuff. So here's the statistics for our local market. First of all, occupancy has held fairly steady. The vacancy has gone up a little bit, but it's still well below where the national numbers are, but trending in line with it. So overall, the vacancy factor is about a 6% vacancy, which is pretty healthy and normal for a market of this size. The rent growth has definitely slowed, but is holding consistently at around 3% rent growth, with an average rent of $1,411 per unit across central Pennsylvania and northern Maryland market. So the rent growth, while that sounds like it's not good that it's slowing down, it actually, in proportion to the income that people have available to pay rent, those two have actually merged together recently, which is significant because for the last 4 years, the rents have been outpacing the income for the renters for a significant period of time. And that obviously is not a healthy ratio that can be sustained for the long term. So the fact that they are now in equilibrium is actually a really good thing. The next thing that you should be checking and keeping a very close eye on is your job growth. And job growth in the Pennsylvania region actually is very strong. If you look at the statistics nationally, the markets that have the strongest job growth, the Philadelphia region, which is a reflection of this market, is fifth in the nation for the job growth at about 1.5% increase. And that's actually a whole lot better than some major metro markets like Phoenix, for example, which is barely flat or negative. So the fact that we have really strong rent growth is super important because obviously your tenants need jobs to pay the rent. So that is a very positive upward trend. The supply in central Pennsylvania has definitely increased over the last 3 years. We've seen about 4,400 units come into the market, which may sound like a lot, but the fact that the demand metrics and how fast the population is growing, actually those building of units is not actually keeping up with that population growth. So the fact that we are building and continuing to do so is a really healthy thing. But the fact is that we don't have a lot of land that is zoned appropriately for multifamily housing. So the fact that we have a limited supply of land is going to keep a lid on new supply coming in. And because there's a limited supply of new units coming into the market, it holds up and protects those rents a lot more than in markets like in Texas, where it might be a whole lot easier to build, but you get way more supply and then obviously competition. So the limited supply for you as a landlord is a good thing. And then finally on sale price, the average price per unit for properties that were sold is $137,500, which is actually continuing to rise and is setting new benchmarks for the sale price per unit. That's not surprising considering all the inflation we've had recently, but it's interestingly that it's really a reflection of the fact that we have a very strong job base, a really strong economy that's underlying that, and that's why you continue to see the prices escalating. Definitely more than what the rent growth is doing. So people are actually buying those for less income. But that's generally what happens when you see a market that is experiencing a lot of inflation. So there's definitely inflation that's keeping a steady trend going on right now, which is why people are paying higher prices on a per unit basis. So if you are an investor and you're thinking about selling, it's definitely still a very healthy time to sell. And if you're wanting to buy now before the prices go up, I would say that's definitely a good way to look at it, especially since we are anticipating an interest rate continuing to go down here in the future. So I hope these statistics brought you some value. If so, please like, comment, and share. And if you're looking to buy or sell investment properties in Pennsylvania or Maryland, please reach out to us. We're happy to help.